I have a question. Would you rather be right or make money? Hello, everyone. Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we going to talk about? Well, I want to talk about the methodology in action. I have a mystery chart reveal. I want to show you a couple of IPOs that I'm trading. Two work spectacularly. One, not so much. You'll see that in just 1 second. I want to continue to talk about investing like a trader. And I want to talk about inefficiency. Now, inefficiency is not the most exciting thing in the world, but it can really be a trader's dream. And I'm talking about one specific market that I'm super excited about, in addition to IPOs right now. Housekeeping, by the way, I do take requests. In fact, the last couple of shows were inspired quite a bit by a YouTube comment on whether or how you should treat the markets if you're an investor and not a trader. And we'll talk about that in just 1 second. If you need to reach me, DaveLandry.com/contact. You want slides from this show and all the other shows, DaveLandry.com/Stockcharts. I'll also give you a bunch of stuff to keep you busy for a long, long time. Get to know me first is what I believe in. If you would like to come to my weekly show that I do on my own, I've been doing for probably 20 years, DaveLandry.com/webinar. Register. Even the link, or the date, I should say, is old. And a lot of stuff, you could ask questions live there, and we can cover a lot of stuff that might not fit into this venue. All right, let's talk about the mystery charts and the methodology in action. So this was a mystery chart from last week. We'll go ahead and do a reveal. It was BX, was actually a short. And there's the parameters down there. You can see in the spreadsheet, BXL short. You would only short 200 shares on a 100K account. And I'll show you in a minute how 200 shares could be enough. Anyway, nice little thrust lower, followed by a retrace, but it never did trigger, and it just kept going higher and higher. So in this particular case, I took it off as a possible setup, and no capital was put into harm's way. And that's something very hard to quantify when you have setups that don't trigger, because you don't lose any money and you don't make any money, obviously, but it's kind of hard to quantify this, but very important to wait for entries on trade. And that's something that I beat the dead horse on quite often. I'm amazed at how many times waiting for an entry will keep me out of trouble. You too. Okay, I want to talk about market inefficiencies. And this is a subject where your eyes might glaze over a little bit, but I promise it'll be worth your while. Whenever I hear one of my peers talk about market inefficiencies, I get really, really excited, because I know that's really the holy grail of markets, and that's where the money is. And as I've been preaching quite a bit lately, when people ask me what I do, and once they get to know me and they're like, this guy's running around in shorts, kind of, I have on shorts right now, but he's got shorts and a jacket on. What the hell do you do? Well, I just buy stuff that goes up and I sell stuff that goes down. Yeah, a little bit more complicated than that, but you get the idea. And in a few minutes, I'll show you just how, in some cases, you could do just that. Anyway, so grab a cup of coffee, because this might not be the most exciting thing in the world, but it is for me, because that's where the money is, believe me. So let's talk about efficient versus inefficient market. An efficient market, everything tends to be priced in. Now, what does that mean? Well, it means that there's a lot of analysts, there's institutions, heavy institutional ownership. It's widely held, an S ton of analysts. In fact, somebody said a while back there were like 5,000 analysts on Apple. But anyway, a lot of times the stock might be at high levels, and everything is sort of priced for perfection, and everything's kind of priced in, and it doesn't necessarily move around a whole lot, because there's not a whole lot of excitement coming into the markets, and it will take a lot to move it. Very, very thick, widely held stocks would be efficient. Well-established markets, the E-minis, even though they look like they trend longer term, and I guess to some extent they do, can be a really, really choppy market. I have a love-hate relationship with them. As one of my trader friends jokes, you love them and they hate your account. They can be really tough to trade. Very efficient market, so you really have to pick your spots carefully. There's lots of fundamentals. You can look at how many assets they have and the book value, and I would be stupid to try to spout off any more fundamentals, because I don't really know, or probably wouldn't know fundamental to hit me in the butt. Anyway, they tend to be lower in volatility. Now, on the other hand, an inefficient market can make a huge potential move. And a lot of these are not foreseen unless, of course, we seek them out. And I'll show you a couple of things that I do there in a few minutes. There's a plethora of greater fools waiting in the wings. And this is especially true lately in the crypto, specifically the altcoins. And again, we'll get to that. Emerging markets, this is a market that's a term that's a little overused, but it's something that's not quite as established as the way I look at it. Emerging markets, sometimes I think that's overused to be like Asia or something. But a lot of times emerging markets, or at least the way I see emerging markets, is something like the altcoins and possibly some newer IPOs. And these stocks wouldn't know a fundamental if they hit them in the butt. And markets trade on emotions. And people often forget we're trading traders and not markets. So you want to be in those inefficient markets that are trading purely or mostly purely on emotion. They tend to be higher also in volatility. Now, keep in mind that, and this should be inefficient right here, it's a moving target. So efficient markets sometimes can make inefficient moves. That BX I was talking about earlier, Blackstone, I think is the name of the company. I was looking for an inefficient move to the downside. That's a big, thick, efficient, for the most part, stock. Sometimes an efficient market can make an inefficient move. Now, sometimes, again, like if you've got a stock that's at high levels, everything's sort of priced in. That's what I meant earlier. And your upside potential isn't that great, but you could possibly have some downside potential. Now, hopefully, and I hate to use the word hope in this business, hopefully the market doesn't resume its recent sell-off, so we don't have to mess around with the short side. But the short side is kind of just the opposite of the long side as far as efficiency is concerned. And you actually want to be in the more efficient stocks on the short side because everybody runs for the door at the same time. That's a completely different lecture, but just to kind of give you a little intro to that. And if we get into a market that begins to roll over, believe me, I'll beat the dead horse on that even more. And sometimes a well-established company has just reached the end of its useful life. Competition comes in, or technology gets updated, et cetera. Now, on the upside, and we did have one stock run up 500%, and that's an extremely inefficient move, right? Because how long does it take the market to run up 500%? It took the NASDAQ 1995 to, I think, 2000. It took the NASDAQ 5 years. So, well, sometimes not that long, but that was an inefficient move. But sometimes on the upside, like the stock I was just referring to, it bottomed out for a while and began to rise from the ashes. And sometimes oil field stocks can do this. And CPE, that was the oil field stock that we were in that did that. And inefficient markets will become more efficient as they become more and more crowded. I would venture to say that eventually, as more and more players enter the Bitcoin market, it's going to be more and more efficient, or become more and more efficient. And also consider market conditions. For instance, if the overall market's beginning to roll over and it's getting ready to tank, and we're getting sell signals, then all of a sudden those efficient stocks will become inefficient. Now, I know this is kind of not the most exciting stuff in the world, but if you can learn to seek out and find these inefficient markets, you'll be incredibly successful. So what's inefficient right now? Well, crypto, specifically the altcoins, and IPOs. Now, keep in mind with IPOs, it tends to wax and wane, and the overall market conditions can factor that in, or you have to factor in overall market conditions. When the market's doing really well, you start getting a lot of IPOs. And sometimes when the market first gets a little iffy, IPOs continue to do really, really well. And then eventually everything gets sold off if the market begins to sell off. So let's take a look at some IPOs. We'll come back to the altcoins in a little while, and then hopefully have enough time to search out some. So this is Dutch Brothers. It had a really nice run up, and then it made a pattern I call a first deep retracement. Sometimes IPOs get a little ahead of themselves. They pull back very deeply. I don't actually measure this, but you could measure how deep these are, and they're probably 50% retracement or so. And you look to capture that reversion to the mean move back in the direction of trend. And as these things begin to rally again, new people begin to come in. A lot of people get shaken out in that deep retracement because you had a lot of people coming into the market, at least initially, thinking they were going to get rich. and then they dump the stock. And then all of a sudden they see the stock going up without them, and they decide that they have to get back in. Remember, everything I do has a psychological backing. We're trading traders, not markets, as I said a few minutes ago, and as I say ad nauseum. So here's a trade. I only did a couple hundred shares, at least in this one particular account. I did do this across multiple accounts, but it worked out fairly nicely. As you can see, entry was here, and then I took initial profits a few days later and trailed the stop higher. And that run from, not from where I got in, but you can see the run from the pullback was 38%. And that was over a short period of time. And over 3 days, I was able to get my initial profit target out. So that move was not priced in, so to speak. So that's a very inefficient type of move. Now, ARBK, this is another one I'm long. This is day 5 here. It's a pattern I call a buy at B. And I've covered this in prior shows, so I don't want to go into too many details. But if you look at the weekend charts, one place to find that would be YouTube/C/Dave Landry, and I have a playlist there. You could also look at the older trading simplified shows, and we did talk about IPOs quite a bit. So the entry is, the line's a little bit off, but it's based on this close right here. And after day 5, on or after day 5, it closes above that high with a few caveats. Then you look to buy. So my buy signal was here, and that was day before yesterday, I think. And then initial profit target is up here. And I do have a limit order in, trying to take off half of those shares. Or hopefully, I mean, I hate to use the word hope, but hopefully it'll hit that. And so this 11% potential move is what I'm looking for. And 2 days is not priced in, and we'll see. All right, and now I'm going to show you something that a guru has never shown you. When I'm in person and I say this, everybody gets all excited, everybody wakes up, and then I show them a losing trade, and I'm like, what? What a jip. But here's the deal, you know, we do lose money in this business, and this is the tough part of the business. And you just have to be willing to have a stop in place. So here was day 5. The buy was based on this closing high the day before. Day 4 set the closing high for the week. And here's where I bought. And then unfortunately, a couple days later, 3 days later, I got stopped out of the position. It, spelled with silent SH, happens. And, you know, you have to remember with this inefficiency, it does cut both ways, because you are dealing, as I said earlier, in more volatile markets. So what you have to do is you drop an F-bomb and move on. Actually, one of my clients, yeah, actually, that's the F-bomb right there. I took a picture of it. He actually sent me one, because I'm often talking about F-bombs. And you just have to move on, and you can't waste the mental capital of worrying about a position. Now, a couple of weeks ago, last week specifically, or maybe the week before, I was asked about what's an investor to do. You talk about all this trading stuff, Dave, what should I do if I'm an investor? Well, I think you should think like a trader is what you should do. And I showed these last week with the actual day count in here. But if you look at the positions in the open portfolio, you could see this one here, APG, put that one on way back last July. And this one was on in November. Wow, is it almost November already? That's crazy. So we've been in this one for almost a year too. This one here, a year and change. And then hopefully, and I know you should never use the word hope, but hopefully we'll be in these two. By the way, this one CFLT was last week's mystery chart reveal, and it hasn't really done a whole lot just yet, although it was up right before I went live. So knock on wood, so far so good there. But anyway, so that's a portfolio. And the point is, even though I'm a trader and I've placed a few day trades today, might be in and out in a few minutes, I will stay with a position as long as it moves in my favor, especially when I am doing the swing to intermediate term trading, which that's where the real money is, by the way. And that's where the aforementioned 500% gain comes from. You can see some of these we've been in for a long time, up in the triple digits really nicely. So to invest like a trader, I was thinking about this. How can I boil this down? And all you really need is some sort of performance metric. And I woke up thinking this morning, even the greatest investor in the world could use a performance metric. Now, everybody, it's like a sacred cow for some reason. I don't understand why, but Mr. Buffett is a sacred cow, but I'm going to talk about him anyway. So in the background, I have Berkshire Hathaway, or the bar chart. You can see it's a weekly chart. And I went back to 2000 and notice what the NASDAQ did over this period of time. The NASDAQ is the black line chart. NASDAQ went up 163%. And Mr. Buffett's fund during that same period of time went down 51%. And the reason I compared and contrast to the NASDAQ is if you have a performance metric, then obviously the NASDAQ is doing well. You'd want to be in the NASDAQ, and you wouldn't want to be in a value fund during this period of time. Now, another period of time, I went in and grabbed just to see what happened, but I noticed that from 2008 down to 2009, March 2009, the same fund lost 54%. By the way, in the hedge fund world, if you lose 54% for all intents and purposes, you have blown up. Now, the reason I wanted to bring up Warren Buffett is that all asset classes will lose at least half of the value at some point in your lifetime. And everyone talks about Buffett being the GOAT, and his fund occasionally loses half of its value. Now, as long as you're not getting ready to retire, I guess you're okay. But you really don't want to lose half of your investments. So I guess the question is, what performance metrics should I use? And this is something I'm going to flesh out in upcoming shows. And I think that a performance metric obviously is necessary. Ignore this part of the slide. I had the issue right before I went live. Well, that's pretty much up to you, but here's some ideas. And these are the same things that I often use in a lot of my trading. So for the S&P 500, I would start with the TFM 10% system. Go back a few weeks ago when the market was right at its peak. I think I've missed it by a few days. I did a show on before the bomb blows up. In other words, learn how to market time before the market crashes, before the bomb blows up, right? Now I'm talking with Stockcharts.com, and I wasn't aware that I couldn't adjust the parameters on the TFM 10% byline, but I'm going to see if they can give me a parameter there, because other markets, other than the S&P 500, you might want that parameter to be a little bit wider. I don't use the TFM 10% system in any other markets, but I think if you did, I mean, it would be a good place to start, at least a very simple performance metric. You could widen that out a little bit past 10%, depending on the volatility of the market. So once that's available, and I'll announce it here, you can tinker with it for other markets. Otherwise, you could just do a quick mathematical calculation. Easy for me to say. Bow tie proper order. I talk about this really quite a bit, and that's just the order of the 10 simple, 20 exponential, and 30 exponential. For uptrends, the 10 is greater than a 20, and a 20 is greater than 30, and just the opposite for downtrends. And again, watch prior shows on that. And also in upcoming shows, I'll spend some time going through these and how something so simple can keep you on the right side of the market. 30-day EMA Landry light is my current favorite. I know you want to party with me, but if the lows are greater than the moving average, in general, the market's in pretty good shape. And you certainly don't want to have a whole lot of downside Landry light when that occurs. And to my surprise, even though it's got a little lag to it, which isn't always a bad thing, the 50-day SMA can really work well with the Landry light. And we'll get to that. Now, back to market inefficiencies. Would you rather be right eventually or make money? Well, I don't know about you, but I'd rather make money. So I've talked about this quite a bit, but there was somebody, and he said it's BS for a long time. And so I just went back and captured the last year or so in Bitcoin. And when it sold off a little bit during the pandemic, he was like, we told you so, we told you so. And then he continued to say it's BS, it's BS, it's BS as it goes up, whatever it went up, 1,000% or whatever. It sold off again. Of course, he said, we told you so. And then now he's back to saying it's BS. So I guarantee you, this gentleman never made any money in this market. So you'd rather be right eventually than make money. Now, a couple of things about Bitcoin, and some of the arguments they make is it's not going to replace currencies. It has no value. Transactions aren't instantaneous, and many other logical arguments. Now, I'm not going to debate these because I really don't care. As a trade guy, trade following moron. If it's going up, I'm buying. If it's going down, I'm selling. But I think they're kind of missing the point. Bitcoin now is sort of a store of value, and I use that term loosely, but it's a store of value, and it's not really a currency, or I wouldn't really see it as a currency. And when I do transactions in Bitcoin, I notice it does take a little while for that transaction to happen. So it's not like it's an instantaneous transaction. Something maybe like Ethereum might actually work better for that. It has no value. Well, I don't know about now, but it used to be $4,000 to create one Bitcoin. I guarantee you at $60,000, it's probably a heck of a lot more than that. But anyway, lots of logical arguments as to why Bitcoin is BS. Now you're probably thinking, oh, that's crypto, Dave. And I could see where people would think that way. Well, I'm old enough to remember the .com bubble. And everybody back then was like, not everybody, but people who wanted to be right and not make money were like, oh, .coms are BS. And then, of course, when the bubble eventually burst, they're like, I told you so. So the point I'm trying to make is just look for opportunities in markets. Don't get too wrapped up in what the markets are. I'm not saying bet your life savings in altcoins or crypto. And as I've been telling everybody lately, if all coins blew up overnight, and I know there's some arguments that Congress is getting angry because they're missing some tax revenue there and they might shut the whole thing down. Who knows? But I think you can make a lot of money in the meantime. And again, don't invest your life savings. Like I said, I was getting ready to say, if all my crypto blew up overnight, I'd be upset. Don't get me wrong, but I would live to fight another day in other markets. Now, you got to realize that emotional and irrational markets are a trader's, and I would venture to say an investor's best friends. I have some crypto positions that I put on a while ago, not that long ago, maybe a couple of months, but I'm willing to hold on as long as they move in my favor. So my favorite irrational and emotional market right now is the altcoins. And I'd say I'm newer to altcoins. I traded Link maybe a few years ago and not realized it was an altcoin, but one of my clients is really into them. And he sent me this meme, and I just love this meme. And this is how I felt. I remember one weekend, I forget exactly how long ago it was, but discovered the altcoin. My wife's like, what the hell are you doing in there? You know, I just had a blast trading these, and these are awesome. I did a little research on this guy. He's kind of interesting. He's got very accomplished whatever scout, but he could, like, for instance, he could tie 976 knots, but he can't undo a bra. I could make fun of him because I was a scout at 1.2, and I couldn't do a bra either. Anyway, all right, let's again, a trader's an investor with a performance metric, and sometimes you could just buy strength and sell weakness. Now, I want to jump into the crypto charts, and I want to look at the altcoins and show you that how sometimes you could just do that, just buy strength and sell weakness. And you could also use a lot of the other patterns, such as Landry-like pullbacks into crypto. Okay, so here we have the ACP platform, just a simple 30 EMA, exponential moving average, is plotted. And down here is a Landry-like. And this just tells you, again, how many days the lows are above the 30 EMA. By the way, if you want this plugin, it's absolutely free. It's down toward the bottom right of your screen. All you have to do is like the video. Now, in these altcoins, sometimes you could just buy the strongest ones, and it can be as simple as that. Now, there's a few caveats here. I do like to do a little other technical analysis, but sometimes you want to focus, again, on the strongest ones. For instance, I noticed, and I'm just noticing this in real time, this UMA, I bought this earlier. Oops, it's already come off a little bit. See how volatile they are? See how you shouldn't be trading these things? But I did buy this one earlier today. Let's see. Oh, I'm kind of flat from where I got in. Didn't quite hit my IPT on that one, but in some cases, you can just buy them as they're going up. And this one, I've been long for a long, long time, or quite a while, I should say. And I believe I bought it back here when it began to break out a little bit. By the way, I'll show you a quick little system. We've been talking about this one in the weekend charts. And all you're looking for is 2 bars of Landry lights. And then you look to enter above the highest high of those 2 bars. And I'll flesh that out in upcoming shows. And if you want to go in and watch last week's weekend charts, you can check that out too. So here's one. I think I might be long this one. I don't know for a fact, but the little system, let's say 1, 2, the entry would have been here. But the fact that it's going up, I think it'd be worth a shot. Now that one just looks kind of thin. So these are the altcoins, and there's a bunch of them. In fact, there's a lot of them that are being added to the database as we speak. And sometimes, again, you could just use something simple like Landry light pullbacks. And I think we talked about a couple of those last week. If some of them come up in the scans today, I'll talk about it. But the main thing you want to do, again, you just want to look for the strongest ones and try to stay in those. And when they start going down, just get out. And you know, these things are like a bus. I can't remember which ones I've been in and which ones I haven't. You just can't get attached to them. And that's the beauty of it, is they're just trading on this pure emotional basis. And I think that part of the reason they're working so well is because a lot of people are poo-pooing them. And a lot of people saying all these arguments as to why they shouldn't be going up. So here's Bitcoin. I mean, you could just buy Bitcoin now because it's going up, right? And if it starts, let's say, trading below 30 EMA, then maybe just get out of the way. See what else we can find here real quick. Got about a minute left. And again, I'll spend more time on this. And if you go in and watch the weekend charts in last week's shows, in prior shows, I've spent a lot of time on this in previous presentations. But basically, it's a wonderful market now. They're not, you probably say, but Dave, they're not all going up, like you said. Well, right now they're not, but maybe over the next few days, they'll get hot again. And keep in mind that they do heat up and cool off. Okay, well, I'm nearly out of time. I want to thank all you guys and girls for watching today. If you have any questions, feel free to contact me, davelandry.com/contact. I could use some fodder for some research, and I would love to know what I'll talk about next week. If not, I'll just continue to pick up this investing like a trader, and we'll seek out some inefficiencies. And again, if you want the slides from this presentation, all the other presentations, davelandry.com/stockcharts. So thanks everyone for watching, and may the trend be with you.
Hey guys, Dave Keller here with Stockcharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.